I'm not looking for the next Palantir, and here's why. Welcome back to the Stock Likes Pod. This is episode 2. I've owned Palantir since 2020, and if you follow this stock and this company for any amount of time, you know it's been quite a journey. And there's been periods when people thought Palantir was a future technology. There's been periods when people thought the stock was completely overvalued. There's been huge rallies, there's been huge pullbacks. And now, with artificial intelligence becoming one of the biggest investment themes in the market, Palantir has once again become one of those stocks everybody's talking about. For me, it's probably the most interesting AI related stock I've ever owned. But here's the interesting thing. I'm not looking for the next Palantir. I know that sounds strange because you own a stock that performs well, extremely well. The natural reaction is to start looking for another one. You start thinking, what's the next Palantir? What's the next Nvidia? What's the next company that nobody's paying attention to today? That could become an enormous 5 to 10 years from now. There's nothing wrong with looking for a great investment, but I've started thinking about this differently. I don't think I need to find the next Palantir, and I think that realization can actually make a better investor. So that's what I wanted to talk about today. Welcome back to the Stock Likes Pod. In episode 2, we get into it. This is where I can slow things down a little bit, talk about investing, talk about the market, and share what's on my mind without necessarily turning everything into a traditional stock analysis. So let's get into it. There's something incredibly exciting about finding a stock early. Imagine finding a company before everybody else knows about it. You buy shares, the company grows, the stock starts moving, more people discover it, and eventually you're sitting there thinking, wow, I found this before everybody else. That's a great feeling. And if I experienced some of that with Palantir, but there's a problem. Once you experience that feeling, you want to experience it again. And that's where something can become dangerous because suddenly you're not investing anymore. You're hunting. You're looking through stock screeners. You're watching YouTube videos. You're scrolling through financial Twitter or X. You're looking at Reddit. You're listening to everybody explain why some tiny company is going to revolutionize artificial intelligence. And every time you see a stock go up 50%, 100%, or 200%, you start thinking, did I miss the next big one? That's a terrible mindset to have because there's always another stock, like there's always another day. There's always another story. There's always another opportunity. That's somebody claims is going to be enormous. And if you're constantly chasing those opportunities, you can end up making decisions based on excitement instead of fundamentals. One of the biggest things Palantir has taught me is the importance of time. When I first invested in Palantir in 2020, I obviously didn't know everything that was going to happen. I didn't know exactly how artificial intelligence was going to develop. I didn't know how large the commercial opportunity would become. I didn't know how much attention the company would eventually receive, and certainly I couldn't predict the exact path the stock would take. But I didn't have an investment thesis. I thought the company was interesting. I thought it was technology was interesting, and I was willing to give it time. That's an important lesson because sometimes investors think the key to making money is finding the perfect stock. But maybe the key is finding enough investments and giving them enough time. That's a completely different approach. You don't necessarily need to predict the future. You need to be positioned for a future you believe is reasonably likely. And then you have to be patient. Here's another realization I've had. I don't need to find another 100x stock. I think there's important things for investors to understand. That is very important. Don't chase the 100x stock. Social media makes investing look like a competition. You see somebody talking about turning 5,000 into 100,000. You see somebody showing off huge gains. You see somebody saying they found the next Nvidia, and then suddenly normal investing feels boring. But investing isn't supposed to be exciting every day. In fact, I argue that boring investing can be effective if you consistently invest, like doing that DCA every day. And if you own quality companies, you avoid excessive speculation. You don't panic every time the market drops, and you don't constantly buy and sell. And if you give your investments years to compound, you don't necessarily need one spectacular winner. You need consistency. Much less, it's less exciting, but it's realistic. Let's talk about FOMO. Fear of missing out might be one of the most powerful forces in investing. You see a stock going up, maybe it has already gone up 30%, then 50%, then 100%, and suddenly you're thinking, I've, I've got to get in. Got to get in right away. Can't wait. You don't want to be the person who watches everybody get rich, right? So you buy. Maybe the stock keeps going up. Great, awesome. But what happens if it doesn't? What happens if it doesn't keep going up? Maybe it goes down. What happens when you bought because you're afraid of missing out instead of because you actually understood the investment? That's when things get dangerous and scary. The stock drops 20%, you panic. Drops another 20%, you're wondering whether you should sell. And then suddenly what started as FOMO becomes a completely different problem. That's why I've become much more comfortable with missing opportunities. If a stock runs away from me, that's fine. That's okay. I don't want to own everything. I don't want to be married to everything. This is something I think is worth remembering. If a stock goes up 100% and you own it, you didn't lose money. You missed an opportunity. That's different. There's a huge psychological difference between those two things. If I buy a stock and it drops 50%, I've actually lost money. If I don't buy a stock and it doubles, I simply didn't participate. Sometimes that's the better outcome because if you choose to chase every stock that goes up, eventually you're going to chase that one that goes down, and that hurts. The market gives you thousands of opportunities, gives all of us thousands of opportunities over our investing lifetime. We don't have to catch every single one. This is another reason, another lesson I've learned from watching Palantir. You can't believe a company is fantastic, still decide you don't want to buy a stock at a certain price. Those are two ideas. They can exist at the same time. You can believe in a business, you can believe in the management, you can believe in the technology, you can believe in the long-term opportunity and say, I'm not buying it at this valuation. That's not being negative, that's investing. Price matters, valuation matters, expectation matter. If a stock is priced for nearly perfection, perfect execution over the next several years, even a great company can become risky because the question isn't just this is a great company. The question is this a great company at the price that gives me a reasonable chance of making a good return? Those are two very different questions. And I want to make this clear. I'm not saying Palantir is a bad investment. I'm not saying Palantir is finished. Not at all. I'm not saying AI is a bubble, and I'm definitely not saying investors should sell their Palantir stock, Palantir shares. I'm not saying that at all. I'm talking about how I think about investing. Palantir can grow. The AI opportunity can be enormous. The company could continue to execute, and the stock could potentially go way much higher from here. But none of us knows exactly what the future holds. And that's why I want to separate the company from the stock price. A great business can become overpriced, and an average business can sometimes become overvalued. That business can become overvalued. And that's why I'm trying to focus less on predicting which company will become the next superstar and more on understanding what I'm actually paying for. Got to know what you're buying, what you're paying for. If I'm not looking for the next pounds here, what am I looking for? Honestly, it's pretty simple. I'm looking for companies that I believe can grow over time. Companies with products people actually want. Companies with strong competitive advantages. Companies that can increase revenue. Companies that have a path towards increasing profitability and cash flow. Companies where the valuation doesn't require everything to go perfectly. The last part is important because I don't want to buy and invest in where the only way I make money if if it is the company exceeds expectations. They beat those expectations extremely to the upside. Rather find something where the business has room to surprise me on the upside. That's much more important to me, and that's much more of a comfortable investment. Another thing I'm becoming more comfortable is holding cash. I know that sounds strange on this channel. We're constantly told that cash is trash, that you have to keep your money invested, you have to put it somewhere, and that timing the market doesn't work. And there's a truth to that. I'm not suggesting people sit in cash for 10 years waiting for the perfect crash. Not at all. I don't believe that because I also don't think you have to invest every dollar immediately. Sometimes having cash gives you flexibility. If the market drops, you have capital. If a great company becomes cheaper, you have options. If your personal finance situation changes, you have breathing room, and perhaps most importantly, you don't feel forced to buy something that's valuable. Because when you feel like you have to invest your money, you can make worse decisions. You can make more mistakes that way. Sometimes patience is an investment strategy. I think another distraction that becomes important to me, I've learned about, I don't want to own 50 different stocks just to say, no, I own 50 different stocks. I want to understand what I own. And it gets, the more, if you own up to 50, it gets kind of, you lose track of things. It's hard to manage. So understanding what I own is important. If I don't understand why I own something anymore, I need to rethink it. There's a temptation to keep adding companies. You buy one AI stock, you buy another, then a semiconductor company, then a cloud company, then a cybersecurity company. Eventually, you've created a portfolio that basically it's a collection of stories, not necessarily investing. I'd rather have a smaller number of companies that I can understand, that I can manage easier. I want to know why I bought them. I want to know what could make the thesis wrong. I want to know what price I'm comfortable paying. Now, don't get me wrong, I still going to look, can't help it. I'm still going to research AI companies. I'm still going to watch Palantir. I'm still going to look at technology companies, growth stocks, and other businesses. that could benefit from long-term investing. I'm not becoming a passive investor here who never makes a decision. I'm simply changing the question. Instead of asking, is this the next Palantir? I'm asking, would I want to own this company if it never becomes the next Palantir? That's a much better question, because if the answer is yes, then maybe you found something worth researching. But if the entire investment thesis is this stock is going to be the next Nvidia, that's not much of a thesis. And predictions are easy. Being right about a business for 10 years is much harder. One of the biggest things I've learned is that there is always another company, there's always another opportunity. You don't have to chase opportunities. Today's opportunity. Maybe you miss a stock, maybe it goes up 50%, maybe it goes up 200%. That's okay. Maybe you never get another chance to buy it at that price. And that is the price you like. You don't get to buy it at the price you like. That's okay. There are thousands of publicly traded companies. Markets go through bull markets, bear markets, recessions, recoveries, technology changes, entire industries disappear, new industries emerge. There will always be something happening. The challenge isn't finding an opportunity. The challenge is having the discipline to wait for opportunities that make sense for you. So when I think about owning Palantir since 2020, the biggest lesson isn't necessarily about Palantir. It's about patience. It's about conviction. It's about being able and willing to learn on your own something without constantly needing to find something better. It's about accepting that you won't get every investment right. I don't know whether Palantir will be my best investment. I don't know whether it will be my worst. Nobody knows. But I don't know that watching the company evolves over these years, I've watched it for so many years, and the company is constantly evolving. But I don't know that watching the company evolve over these years has changed how I think about investing. That's valuation in itself, because investing isn't just about making money. We all want to make money. It's also about learning how you behave when your money is on the line. Did you panic? Did you chase? Did you sell too early? Did you hold too long? Did you Are you constantly changing your strategies? Did you do all those things? Can you develop a process and stick with it? That's the part that matters. The last part. Can you develop a process and stick with it? So that's where I'm at right now. I've owned Palantir since 2020. It's been one of the most interesting investments I've ever made. I'm still fascinated by the company, and what it's doing with artificial intelligence. But I'm not sitting around trying to find the next Palantir. I'd rather find great businesses at reasonable prices, invest when the opportunity makes sense, and give those investments time. And if I miss something, that's okay. I don't need to own every winner. I don't need to find the next 100K stock. I don't need to predict which company will dominate the next decade. I just want to make good decisions here, because over a long period of time, I think it's consistency that beats everything. I think consistency beats excitement, and maybe that's one of the biggest lessons Palantir has taught me. Sometimes the hardest thing to do as an investor is nothing. Wait, research, be patient, let let those opportunities come to you. So I'd love to hear what you have to think. Are you constantly looking for the next Palantir or Nvidia? Or have you reached the point where you're more interested in finding great companies, holding them for the long run? Let me know in your comments. And if you enjoyed this episode of the Stock Likes Pod, subscribe and come back for the next one. I'm Eric, and this is the Stocks Like Pod, episode 2. Thanks for listening. Again, this is just my opinion here, not a financial advisor. And I guess do your research, and I'll see you guys on the next episode. And thank you for listening.